Hey everyone, I'm Charting Man Dan, trader and technical analyst with the Chart Guys. In this video, we're going to look at the broader market and I'm going to talk about the sucker punch that we often see in markets and some trading styles that we can utilize when that takes place. And we're also going to check in on the AI sector, Tesla, and all of our major names. Let's look at the charts. So the S&P 500 futures following through from the 4-hour falling wedge we've been watching. And SPY has a big upper wick. Hopefully TradingView will fix this on the daily time frame, but that didn't happen today. So defaulting to the S&P 500. And as we know, what we care about now for the next few days is, do we set a daily lower high and confirm the daily downtrend to have further weekly consolidation and a target of weekly EMA 12? Or is that it and it's a weekly bull flag and we're heading higher? And right now the bounce retracement size on the S&P 500 is over 50%. That's a good sign for the bulls. And normally, knowing that there's a holiday coming up, let's see, we've got 2 trading days, and then a half day, and then a holiday. I would be anticipating things to slow down and tighten up, but there's a number of names that tell me volatility is coming. And we'll look at those, it's Tesla and Meta. We'll look at those names in just a moment, but they're extremely tight. And the healthcare sector as well. So that's 3 that tell me we're likely to see some volatility pick up this week. So keeping an eye out for the S&P 500 and the NASDAQ. NASDAQ now has its daily bounce underway. We had a hourly trend change confirm. There was a lot of volatility today, and this is what I call a sucker punch. So the sucker punch happens counter trend. And we saw the sucker punch from the bulls in the bear market. And I was specifically remembering back in January. And that was in the bear market, I should say. And actually, it might have been December. Whatever it was cold. That's what I'm remembering. But it's essentially when you have a trend in full control and then the counter trend makes their move and it's fast and it's hard. But when that move stops, that's it. And I call it a sucker punch because the analogy that I give is, all right, here's the bears sucker punching the bulls. The bulls were happy with a nice little 5-minute uptrend. They had control, new high of the day, and then out of nowhere, a huge drop. Relatively speaking, but you know, a 1% drop in 40 minutes is pretty huge for the market as a whole. This is why we keep talking about why trends are so important. After this drop, you have to confirm the downtrend to prove your control. Because what happens is you sucker punch the bulls then collect themselves, they're stunned, but they're all right, now let's fight. And then the bulls hold on, and that's the low. Once the bulls are ready to fight, the bears don't get any further. And this is why the stair-step strategy is so powerful. Google Chart Guys stair-step if you don't know what that is. But the stair-step broke bull here at 363.48. And from that point forward, that was the low of consolidation. Not a huge move up, but if you look at other individual names, they had a bit of a better bounce. NVDA, 5-minute stair-step, broke bull at 410. We then went up over 1%. So it's a strategy for saying, okay, this is a fast, hard drop. I know that the other direction is going to have to confirm a downtrend if they're going to prove control. So I'm going to try a stair-step bull break entry in the possibility that that's it. And we then just grind up from there. And we've seen that many times. And it happened in the bear market. We would start the morning. We would get a fast, hard move up for 15 minutes. And then once the stair-step broke, the bears controlled the entirety of the day from there. So it's a strategy. It's just a trading style. It's a market behavior to get accustomed to, because when you're not used to it, it's, oh my goodness, the market's falling apart. When in reality, we know, okay, bears are proving something to us. This is a hard drop with some nice volume behind it, but we must confirm the downtrend as a response. And I'm just looking now in the chat room to see what I was saying as that was going on, highlighting the importance of those trends. So this is essentially my mindset when I see this happen. So red flags for bulls, but red flag for bulls, cautious of daily lower highs, but the bears have to confirm downtrends once we find the bottoms, and they didn't. So they didn't follow through. Bears did not follow through at all. So QQQ is hoping that that is just an hourly high or low, that fast, hard drop. And the bears will have to prove to us tomorrow if daily lower highs are shaping up. And you look on the daily time frame, there's a little bit of an upper wick, But again, it goes back to yesterday's video. We're not going to see the NASDAQ set a daily lower high unless we see our major three most important stocks, Meta, Apple, and Amazon, lose daily EMA 12. So Meta, quadruple top, really struggling with 290. But again, look at how tight we are 4 days in a row here. And a break is coming probably tomorrow. And then you've got Apple, new all-time high. Again, the NASDAQ is not going to see any kind of weakness in any meaningful way. If Apple is hitting all-time highs, which we've now seen 4 days in a row. And Amazon, double top. All right, let's keep an eye out here. Amazon failed resistance to the penny by 1 penny. If we drop down and break 127.10, we will very likely lose daily EMA 12. So it's possible, the setup is there for us to potentially see daily lower highs, but I've got to see Meta break that sideways range bear. I've got to see Amazon lose this support level. And I've got to see healthcare break bear. Remember the healthcare sector, the volatility from a couple days ago? Anticipating the hourly equilibrium was the most likely scenario, and that's exactly what we've gotten, and it's a beauty. It's going to break tomorrow. How do I know that? Because we're so tight that we're not possibly going to trade in this constricting range any further. So watch how healthcare breaks. Again, I'm not going to trade healthcare, but it's going to impact whether or not the S&P 500 is shaping up a daily lower high. So we can see the path forward of daily lower highs in SPY and QQQ. We know the burden is on bears, and we have to see these little pieces of the puzzle confirm that that is what is taking place. NVDA. So I was frustrated by NVDA today, and it's very tight. Volatility is coming. So inside bar, if they break bull, anything under 440 will just be a daily lower high. If we break bear, we're going to look at the low of consolidation, 401. Overnight, we had news, or after hours yesterday, of Biden saying again, hey, we might restrict chip sales to China, and it might happen as early as July. And so we dropped real hard in response to that overnight. Big drop. And the bell rang, and the bulls had us over low of yesterday's support. When the bell rang, we held support by less than $1, and the bulls showed up on the morning. That said, so I was frustrated with NVDA, and I was attempting, I had my AI long swing, which we'll talk about. That went well. And I was looking at NVDA for a potential hedge. I liked that it confirmed a 5-minute downtrend on the morning, showing me relative weakness. And I was anticipating that QQQ was going to be a potential 5-minute head and shoulders here. I was anticipating we might tighten up further and fail to break the inside bar today, but I was wrong. QQQ bulls broke bull, and so I ended up stopping out of an NVDA short with the new high of the day. And I was viewing that pretty much as a hedge. I'm not going to sell my AI swing position on the morning. And so if we see weakness in the market, I want a bear position, but didn't play out. Where I got frustrated with NVDA is I had a good entry for an hourly lower high. I was looking for this morning bounce to give us an hourly lower high compared to 419.40. And again, we had this wall of support at 420, and then it acted as resistance yesterday. And so I was looking for a lower high compared to that level. And I saw relative weakness where we had the high, big pullback, and then we set a lower high here. And it was relative weakness again, because at that point in time, QQQ was showing just a little bit of strength. It was very similar, but a little bit of relative weakness there. And then we had news come out from NVDA, I forget it was CFO or who, said, even if we restrict sales to China, it's not really going to impact us. And you can see this 1-minute candle here just shot right up, and that stopped me out. And I was risk-free, so I didn't lose anything. But to get stopped out on a bear position looking for the hourly lower high, and then for that to happen, I was frustrated because that was the trade that I was looking for, and that was the trade that would have been a big win for me. And I didn't have a position in that because I got stopped out, and then we complete reversed, and it was just getting a bit volatile. So at that point in time, I recognized my frustration and sat on my hands and didn't trade much for the rest of the day. And we ended up being a falling wedge on the 2-minute or 1-minute time frame here on NVDA. After all that weakness, bear break, no follow through, bear break, no follow through. And then that's when we got the 5-minute stair step bull break into that more significant bounce. But overall, keep it simple. Daily inside bar is very likely to break tomorrow. So XLV, Meta, NVDA, all tight daily candles for multiple days, likely to break tomorrow. Tesla, nice bounce follow through. Anything under 277 is just a daily lower high. Can the bears confirm a daily downtrend to prove to us that they are gaining momentum? Tesla was a lead bull this morning. The inside bar broke bull first thing at 250.39, and we saw a good follow through from that break. We saw relative strength pre-market, and it just continued all morning. So the hourly uptrends are our guides. When we lose the hourly uptrends, it's the first indication that our daily lower highs are shaping up. So hourly uptrends are going to be key tomorrow and Friday. AI, so finally got the daily bounce, stair step drop, bull break once we got over 33.84. I didn't end up getting a spot where I was comfortable adding this morning first thing, but I ended up adding later in the day, and it was the 15-minute higher low. So grabbed under 35, and then once we got a bit of a bounce here, and I was just using, I was watching 15-minute EMA 12, and after the strong morning, we were looking for 15-minute higher lows on Tesla, on AI, on MARA, crypto stocks we'll look at in just a moment. But once we got a bit of a bounce, from the position that I added, I sold enough to put my stop under that level and be risk-free. So I essentially increased my position size. First thing on the morning, not first thing, but a bit into the morning, I took some profit in AI so I could put my stop under the low of the day, break even, no risk, because if we break the low of today from here, that's a red flag for me on this swing trade. So unless we get a big gap down, I am now in full control of this trade, but I added back, and that's something I'm trying to practice more this year, is adding to winners. And so added the 15-minute consolidation and just placed a different stop level for different positions based on their entries. So ideally, I'd like to increase position size and have the added positions have risk-free stop losses. So in the end, still in a bit of a swing trade. Key support for me in the short term is going to be 34.77, and we'll see if the bulls can keep this daily bounce going. But my finger's going to be on the sell trigger because I do know that I'm scouting the lower high, anything under 48.87, and there's a lot of space for that to form. PLTR bounce continuation, little uptick in bull volume. So nice bounce off the recent lows there. Low cap names, SOUN, bull break to higher highs, continuation, added to the Russell 2000, gave it hype on Monday, inside bar yesterday, and the inside bar broke bull today. Another name, low cap IONQ, supercomputing name, break of resistance, and big follow through. Look at the volume behind it. So the volatile lovers of high risk, high reward setups, I mean, these names are telling us that there's still certainly interest in these hype sectors. And the day today for IONQ is certainly showing us that. Ended up from the close yesterday being up 24%. Long-term bottoms being set. This name is now up over 300% from the low. All right, so AI is still keeping some strength out there, but we know daily lower highs are most likely on PLTR and AI. We're not going to forget that. Crypto stock, so some continuation, but we got to be cautious of a rising wedge on MARA because we keep breaking bull with the lack of follow through. And so looking at the hourly, I would draw an uptrend resistance line to be keeping an eye on, uptrend support line to be keeping an eye on. It's a potential rising wedge. It's still heading higher, even though Bitcoin is testing the low of daily consolidation, which is essentially, if MARA was doing the same thing, we'd be down at 1142. So Bitcoin is not showing us much strength in the short term. It's holding on all right, but it's not going up right now. And so MARA responding more to the NASDAQ today. But look at Riot really struggling with 12. Bears are going to short 12 on Riot as long as it keeps working. And 1206, 1197, 1211, 1218, all with no follow through. And today 1198. And Riot loves to break resistance with no follow through. And here is a perfect example. Bull break by 3 pennies into a 5% drop. So it still remains the same. If looking short, keeping an eye on Riot. And if looking long, keeping an eye on MARA. but again, a bit cautious with the MARA current setup for the possibility of that rising wedge. Chinese names YINN trying to shape up a daily little uptrend. That would confirm a weekly higher low is likely being set if that were to break bull. BABA notably weaker. BABA's a potential daily bear flag. So testing the recent low on BABA, keeping an eye on that. The EV Chinese names are much stronger. NIO yesterday and then following through today. 2 weekly inside bars at the moment. XPEV is stronger. Weekly inside bar bull break. And back up right now testing the highs. Increasing bull volume. And LI is another name. It's been a lead bull for the last bunch of months. It's a bit less volatile. And XPEV and XPEV and NIO are trying to follow along. And again, the reason I like XPEV is the fact that there is a lack of resistance after 1310. We've been range bound for 7 months. And if we break that, things open up a good bit. ARKK, bulls following through, sure looks like a weekly bull flag. Aggressive bulls are playing off that low at this point, 41.51. I would like to see a failure to break 45 and then look for an entry playing off of 41.51, using that as a stop to get a little bit of a closer level nearby. And if we break 45.46, monthly uptrend confirms, and a monthly inverse head and shoulders confirms. Financial sector is a potential daily bear flag at this point. Broke the low of yesterday by only 1 penny. So considering that a double bottom, if 32.70 breaks from here, the probability of a daily bear flag will increase significantly. And so if XLV breaks its tightening range bearish, and if XLF is a potential daily bear flag, then SPY will set a daily lower high. But those are 2 big ifs. We have to see the bears prove to us that that is taking place in these sectors. IWM, strong close, trying to bounce and create space for an eventual daily trend change attempt. The dollar is trying the daily trend change. If we confirm it by breaking 103.17, the weekly higher low is set for the continued equilibrium. And with this bounce, the metals continue weak. Gold, fresh lows. We've been seeing gold as a bear for a long time. No sign of that shifting as long as the daily lower highs remain. Silver set the daily lower high. Clearly stronger than gold, but also still a clear daily downtrend. And the miners following through their bear flag. Again, we're seeing the bearish correlation of the inverse relationship with the dollar, where when the dollar pulls back, gold and the miners are not going up. And when the dollar goes up, they're pulling back. It's almost like, no, analogy, but I don't want to get into it. So, oil. Testing our recent lows, still barely holding. 66.96 held by 9 pennies today. And so we're shaping up a tightening range here. Bulls would have to get over 70.15 for a short-term little win, but worth keeping an eye on this pattern until we get a more clear break here. Just a constricting range on the daily. So that's where we stand overall. Burdens on bears. Again, we can see the path forward of what would be required for daily lower highs to shape up in SPY and QQQ. Now it's up to the bears to reach out and grab it. They had the sucker punch today with 0 follow-through. If you do not confirm trends, you're not going anywhere. Look at QQQ on the 5-minute time frame. We literally didn't confirm a 5-minute downtrend at any point today. Yeah, every drop, some solid drops, no downtrend, no downtrend, no downtrend. You've got to confirm the downtrends to follow through. Otherwise, it's just a higher low on a longer term time frame. And in this instance, the hourly. No end of the day video today. I haven't had a chance to film anything, but I hope you're well. And I hope you do some good things. And we will see you tomorrow to see if daily lower highs are shaping up or not.